Welcome back to the Daily Hunt for Multi-Baggers, your morning kickstart to the market. I'm Ethan, your growth-minded analyst.
And I'm Brooke, here to keep us grounded with the cold, hard KPIs. Great to be here, Ethan.
You know, today's data dump is really something else, Brooke. We've got a fantastic spread of activity, quite a few different stocks popping up, and a lot of buzz across the board. Some truly hot candidates, but, as always, a fair share of risky plays too. It's shaping up to be an interesting morning for market commentary.
Absolutely, Ethan. It's a rich data set, that's for sure. Lots of chatter, which means lots of sentiment to dissect against the underlying financial health. Let's not waste any time and dive right into some of the most talked about names from yesterday's crawls.
All right, let's kick things off with Meta Platforms Inc., symbol Meta. Our AI flagged some really bullish sentiment yesterday. Folks were saying recent news literally saved their calls, suggesting a big positive impact. And when you look at Meta's strategic moves, like that Revos acquisition for chips and Instagram hitting 3 billion users, it's clear they're pushing forward hard.
I agree the sentiment is bullish, Ethan, and the news sounds impressive. But let's check the numbers. Meta boasts an outstanding net profit margin of nearly 40% and a revenue growth of over 21%. That's incredibly efficient for a company of its size. Their return on equity is also north of 40%. Those KPIs paint a picture of a very strong, well-managed company that is effectively generating profits and growing its top line. While there's always risk, those are some solid foundational numbers.
See, that's what I love to hear. Strong growth, fantastic profitability. Based on those robust financial indicators and their strategic investments, our AI-generated insights suggest a buy for Meta.
Next up, we have Nvidia Corporation, symbol NVDA. We saw some really positive technical indicators, with the stock breaking above a key narrow range, and Barclays even upped their price target to $240, calling it the most attractive AI stock. That's some serious endorsement for their AI leadership, Brooke.
True, the enthusiasm is certainly there. However, while Nvidia's revenue growth is a phenomenal 55% and their net profit margin is an astounding 52%, we do need to acknowledge a few things. The stock is trading incredibly close to its 52-week high, and its price-to-earnings ratio is around 50. Plus, the debt-to-equity ratio is a bit on the higher side, at over 10. These aren't necessarily red flags for a company like Nvidia, given its dominant position and growth, but they do mean the market is already pricing in a lot of future success, and there's less margin for error.
Fair points on the valuation and debt. It's definitely not a cheap stock, but the growth, the profitability, and the analyst confidence are truly exceptional. For NVDA, our market commentary suggests this is a cautious buy.
All right, let's pivot to a stock that's generating an incredible amount of buzz, CoreWeave Inc., symbol CRW. The posts were absolutely exploding over their massive $14 billion AI deal with Meta and an even bigger one with OpenAI. Users were celebrating huge gains, with some even predicting $200 by EOA. This looks like a company in hypergrowth mode.
Ethan, I hear the excitement, but the KPIs for CRW tell a very different story underneath all that hype. Yes, their revenue growth is explosive at over 200%, but the company is deeply unprofitable, with a net profit margin of almost negative 29% and a negative EPS. Their debt-to-equity ratio is an alarming 381, indicating immense leverage, and the price-to-book ratio is over 25. While the deals are impressive, these fundamentals scream high risk. They're burning cash fast despite the top-line growth.
Okay, so it's a classic case of future potential versus current financials. The community is clearly very bullish on the long-term vision, but the numbers show significant underlying financial challenges. For CRW, despite the massive buzz, our speculative analysis leads to a stay-away classification for now, unless you have an extremely high risk tolerance.
Exactly. And speaking of high risk, let's quickly touch on UPath Inc., Path. Similar to CoreWeave, there was a lot of bullish excitement about their OpenAI partnership. People were saying sky is the limit and predicting $50 a share. But when you look at their KPIs, it's a PE ratio of 446, a negative operating margin, and a very low net profit margin. Strong buzz, but the financials just don't support that valuation.
So, another stay away. And quickly, for the sake of time, we also looked at Dutch Bros Inc., BROS. The community sentiment was quite bearish, with users pointing out its extremely high PE of 113 for a coffee company and calling it the Temu version of Starbucks. Brooke, that PE ratio just doesn't align with their thin 3.9% net profit margin or high debt.
You're absolutely right, Ethan. Overvalued, thin margins, and substantial debt. Bros is another clear stay away.
And quickly, for the sake of time, our AI-generated insights also flagged OpenDoor, Resolve AI, Lithium Americas, and Ternium SA. In all these cases, despite some fleeting positive sentiment or news, the underlying financial KPIs, things like persistent unprofitability, extremely high debt, negative revenue growth, or highly speculative valuations, pushed our analysis towards a stay-away rating for each.
So, to sum up, here are today's top candidates for your own deeper analysis. Remember, these are AI-generated insights for your consideration.
Investigate as buy, Meta Platforms Inc., Meta. Investigate as cautious buy, Nvidia Corporation, NVDA. And for those of you feeling particularly adventurous, our speculative gamble of the day, where the community is most optimistic despite our stay-away classification, goes to CoreWeave Inc., CRW.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
That's right. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for joining us on The Daily Hunt for Multibaggers. We'll be back tomorrow with more market commentary.
Until then, happy hunting!